Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, the news the last couple of weeks gave updated numbers on foreign buyers in West Vancouver that were directly in the path of your Ponzi scheme report of 2016. Do you think these new numbers match up with what you had?
I think the outcome would match up. I think the report made it pretty clear that there was a disproportionate share of single detached homes, specifically in West Vancouver, that were being bought by foreign buyers. And since that's what the report dealt with, specifically West Vancouver ultra luxury class homes, I guess you could say that, that old research paper has been proven correct. I think, though, that the greater part of the discussion is not how about the foreign buyers themselves, but how was represented by organized real estate and the realtors as to generate house price illusion in Vancouver. I think that's really where the bigger problem is, Jim, and that seems to be pretty consistent with that data. What I would say is that they still have not got an accurate count of foreign owners of Canadian real estate in Vancouver. That number still has yet to be calculated. The methodologies that they've used over all of these reports, which is why the initial reports were so low compared to the most recent reports that appear a lot higher, is because they all use flawed data. Now, I do not have the data to say what the exact foreign buyer count was. What I do is I have the mortgage data that showed me the hole in the mortgage lending debt that was being handed out in Vancouver, that allowed me to come to the conclusion those homes that were being sold were not being sold by Canadians, because with the Canadians, I'm tracking that mortgage debt every single month. We have to track that because it is a latent measure of the housing market, but it's one that we get to use so that when we're measuring the sales mix, we get to verify if our sales mix calculations were correct from 6 to 8 months earlier. So I think what those numbers did, Jim, the most recent report basically just proved that the sales price that were being generated in West Vancouver were not specifically on single sale. It was for flips, like we had suggested in the report, the Ponzi scheme. We believe fully that it was currently a currency-based decision to make these flips happen. It was misused by organized real estate and realtors to make claims about house prices rising beyond what they were actually rising. That said, though, Jim, I mean, let's be 100% honest here. Houses under $1.5 million, those price points were all driven by local buyers. And people who are right now are probably thinking, oh, but Ross, some of those owners of those $3 and $4 million houses, they cashed out and they bought down, which artificially inflated the price of the houses that were $1.5 million too. I would say to you, no, that's not what happened. So any of those people, they might have moved into the condo segment of the market, or they might have moved right out of province. And that's why, since we didn't see mass migration in that manner, I still believe the vast majority of those West Vancouver sales were actually taking place from one foreign buyer to another, and it was taking place on paper. It wasn't even being reported in the standard MLS numbers.
Ross, isn't the real issue here is that the government turned a blind eye to all this money laundering, and that still, even to this date, no federal officers, not even one, is assigned to look at money laundering? Should we be looking at corrupt politicians instead, taking money under the table to allow this to happen?
Look, there should be an investigation why existing laws on the books were not enforced. I mean, we've been saying that on the show here for well over 2 years. Why were the FinTrack forms not collected from the local real estate brokerages? Okay, maybe the local real estate brokerages did not do their legally required FinTrack personal ID forms for every single buyer and seller that they've dealt with over the last decade. Maybe they didn't do that. So then we've got to say, Jim, okay, this recent decision by the British Columbia Real Estate Association and the Mortgage Brokers Association with FinTrack, where now all of a sudden they're buddy-buddy. Now all of a sudden they're going to start reporting. Well, you know something? You don't start reporting after you profited during the periods of good time. We are now into a correcting housing market of historic proportion in Vancouver and in Toronto for that matter right now. Why is it only in after the market has crashed that all of a sudden there's this new attitude that we're going to start doing what we were legally required to do for 10 years? I still say, in my old career as a sales rep, why did the government never collect the 1,000+ FinTrack forms that I had completed for every single customer, buyer or seller that I ever dealt with? Even ones who I didn't sell a house to. I still verified their information before I put them in my car, because I figured at a later time I would have to identify them anyways. So when you bring up things like you're talking about, is it possible that politicians were getting paid off, or why are they not simply saying where are the forms, or why are they simply not going into land Corps and doing the simple due diligence that a spreadsheet audit can do? I mean, this is the honest truth, Jim. If I had access to Land Corps, where I didn't have to pay for every piece of information that I was downloading from them, if I had unfettered access to Land Corps, I could tell you the exact number of foreign buyers who own houses anywhere in British Columbia, to the number. I mean, I might be out 1 or 2, but I'm not going to be out 1%. I'm not even going to be out 0.5%. I can tell you exactly which homes were potentially homes purchased with laundered money. I can do that from Land Corps data. That's because I know how to read Land Corps data. I would cross-reference it against the MLS data, and I would come up with my answer. And my answer would be irrefutable. They could go check with every single house that I had red flagged, and they could find out which ones were laundered and which ones were not. So I don't
Ross, this really does sound like, again, either politicians are being paid off or they're just incompetent.
Well, look, as we said in the show, I'm going to use the word ignorant. So incompetent to me implies that they should have the knowledge to make an informed decision. When it comes to the housing file, Jim, I have, over the years, come to accept that they are ignorant to most of the things about a housing market. They are ignorant to the fact that a personal identification with government-issued ID was required for every buyer and seller who dealt with a realtor for over a decade. If you did not have Canadian-issued ID for the person, you were legally required to file a suspicious transaction report. This was on the FinTrack website for a decade. There were courses available to every realtor in Canada that the Canadian Real Estate Association tried to scare everybody into taking because of the fine and the jail time if you didn't do your proper FinTrack forms.
Ross, is it time then to go after these negligent real estate agents who didn't hand in these FinTrack forms? After all, in Canada, there is no statute of limitations on criminal code offenses. If it's in the criminal code, if you did it 100 years ago, you're still liable for what you did.
2 years ago, when we first got onto this file, FinTrack announced that there were over 500 different reporting anomalies with real estate brokerages in British Columbia. People can Google this and go see the articles that are out there. The government officials' names who investigated this are included in those reports. Okay, we're 2 years later. How come there's not one or two brokerages charged? Why is there not one or... I'm not saying put them in jail, but give them the fine. It was $250,000. Why hasn't a real estate brokerage been shut down who handled 10 or 12 of these transactions? I don't know. So I'm not going to say it's incompetent. I really believe, Jim, they're ignorant to their own rules of enforcement. They're as ignorant to this as they were to your spec tax or your vacant home tax, where we came on the show and we said within 60 minutes of the policy being announced, we had already found a workaround so you didn't have to pay the spec tax, the vacant home tax, by putting a house sitter in. What are we seeing now? Well, we're seeing students paying $1,000 to rent us an ultra-luxury class home simply so the owner bypasses the tax. Exactly what we said years ago. But they didn't change the laws. So I'm going to say, I don't think it's incompetence, Jim. I think it's ignorance. A total ignorance about the housing market, how the buy-sell process happens, how the home trading infrastructure is built, how each of the stakeholders functions in that market, how they were required to function by law, how they don't function by following the law, and all of the potential problems that come about. The only people I'm willing to let off the hook on the issue with Vancouver's foreign buyers are the lawyers. Lawyers went to the court, and the court said that the lawyers have a legal responsibility not to disclose where the money's coming from with their clients. So the lawyers went to court and they won that right. Now, I thought the government should have brought in a policy immediately to override that, but they didn't. So the only people off the hook, in my mind, are the lawyers. And the lawyers should be the ones that you're hiring right now to go off all the stakeholders who simply refuse to follow the law and cause the amount of financial damage done to Vancouver families that has been done and will increasingly be showing up in falling home prices. It is a magnitude of damage that the province of British Columbia has never seen before. And that's my personal opinion.
We'll have more with Ross Kay right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Ross Kay. Ross, talk of money laundering being blamed for higher house prices has almost caught up to foreign buyers. Did either of these create the problem?
Okay, so I know everybody wants me to say yes, but I have to say no. What they did was, Jim, they allowed stakeholders to misuse real estate stats to generate more sales. It was not the money laundering itself which caused housing prices to go up. I mean, the amount of cash that has to go into a Canadian housing market to get prices to raise $1, Jim, is staggering. Now, let's just go back to West Vancouver. Okay, so let's just go back to that one area. Did money laundering or foreign buyers caused the price of the houses in West Vancouver to increase. No, they didn't. Lies did. A few houses sold. Let's say it was 1,000. The Canadians were told that the houses were worth more because foreign buyers were buying them. That's a falsehood. That is the same falsehood that was told to people out in Kelowna, where they were told that a BC home buyer purchasing a home, deciding what they think the house is worth, drives up the prices in Kelowna. It's false. There were only in all of Canada, there were around 480,000 homes that were purchased in a calendar year. Now you've got to take out all the double reporting and everything else. Of those, there was about another 50,000 that were brand new homes, leaving you generally around 400,000. Those 400,000 homes were purchased by home buyers who were ignorant to the housing markets themselves. I mean, when you only buy a house once every 12 years, how are you qualified to determine the price that that house is worth? You're not. But the appraisal industry lets the buyer establish the price. It is ludicrous that that happens. Now, everybody's going to say, well, Ross, how could houses buy and sell if that didn't happen? When you take out the house price illusion, when you remove the illusion from the discussion, there's not a Canadian who would overpay for a house. The only reason they're overpaying for a house is because everybody around them is telling them that's what the house is worth. And that's exactly what happened with this laundered money and the foreign buyers. In certain segments of the market, West Vancouver, single detached super luxury class homes, everybody was told that what those few foreign buyers were willing to pay made those all of the homes in West Vancouver worth more money. Hogwash. The only reason that people believe a house is worth as much money as it is because the real estate agent isn't knocking on the 6 doors around that house asking those 6 sellers if they'd be willing to sell their house. That's why the prices go up, folks. Realtors don't know how to do their job properly in 2019. There is no home buyer in Canada who should be looking at a house on the MLS, picking a house from the MLS, and buying it. They should be going on the MLS, picking a house on the MLS, and then when they find a house type or a home they're ready to buy, they should be knocking on all the similar homes' doors to see if any of those people would like to sell. Because I can guarantee you, there will be someone else with a better quality of house that will sell for the asking price of the one you're willing to put an offer on. It is a scam. It is nonsense. It's the reason why you get house price illusion and housing bubbles, allowing the entire Canadian housing stock to be valued based on what 400,000 random Canadian home buyers who believe myths about a housing market decide they're willing to pay in a calendar year. I hope the listeners can understand how absurd that concept is. Let me put it to you this way. If there are 600 homes in your community and one sells this month, and then the next month, one of the other 600 random homes sells, and it sells for a different price, are you telling me you can tell me what all 600 homes have gone up or down in price in the month? Of course you can't. But that's exactly what happens with organized real estate. That is exactly how home buyers buy houses. That is exactly what the Terranet National Bank House Price Index is built on. It's even built on worse numbers. They will take 100,000 homes and they're only going to measure a couple hundred. And then they're going to tell you the next month, with another random couple hundred houses, what all those houses have gone up in price. That's why it's called house price illusion. That's why the only reason laundered money and foreign buyers were allowed to mess with the market was because stakeholders refused to step back, tell the public the truth, what was going on, and tell them what their options were. And the options were knock on all 6 doors around the house you want to buy.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, mortgage debt is being reported as growing at its slowest pace in decades in Canada. Is this a good or bad thing?
Okay, so let me debunk something for the listeners here, because I know this is in the reports. It's in with the Bank of Canada, Canadian Bankers Association, Bank Economists. I know it's on dozens of websites across Canada today as being a fact. The amount of mortgage debt being booked right now is exactly the same as the amount of mortgage debt being booked in 2013. Exactly the same, within a couple $1 billion. Like, when we're talking mortgage debt, folks, $1 billion makes no difference. The amount of mortgage debt being booked is identical to what it was in 2013. Now, what's common between 2013 and today? The effective interest rate used to qualify lenders for mortgage debt is exactly the same. It was around 5.3% in 2013. It is around 12.5%, 5.3% today. The same. So when the qualification terms are the same, Canadians can only borrow the exact same amount of money. And that's what is going on. Mortgage debt is growing slowly because Canadians are paying off their mortgage debt at a record pace. You are seeing actual mortgages, the number of houses on the Canadian banks' mortgage rolls decrease. In other words, there are fewer homes with a mortgage on them in Canada this month than there was last month. That's because Canadians are finishing off their mortgages and they're now mortgage-free.
Ross, no one's reporting that, you know.
Now, I know that they don't report.
Well, except us.
Yeah, because they don't track the data. I mean, all you have to do, Jim, is go into the bank's quarterly reports, and you can check what each bank is doing, add up all of their data, and you get the total. Why someone doesn't do that, I have no idea. We do it because you have to do it. If I'm not tracking mortgage data, Jim, I don't know where the housing market is going. I need mortgage data so I know where prices are going to be a couple months from now. I know where they're going to be two years from now, as long as the infrastructure stays the way that it is. But how quickly prices are going to drop, I don't know. The only way I know that is by tracking mortgage data. Because, let me leave this with your listeners on this mortgage debt discussion. From 1980 till today, mortgage debt has forecasted house price change perfectly. It is a 100% correlation because it has to be. It's still a latent measure because when we're talking mortgage debt today, we're talking about houses that sold 2 or 3 months ago that are finally closing. Or if it's a new home, we're talking about houses that were sold maybe 2 to 5 years ago that are actually closing today. So that's really latent. But at least it's a number that you can use because you're able to measure a housing market. And when you measure that housing market, you know where prices are going to be headed. So when they're talking about mortgage debt being reported as growing at its slowest pace in decades, what they're not saying is the amount of mortgage debt being booked today. It's two different calculations. As we said in the show before, to your listeners, Google mortgage origination data Canada. It does not exist. Why does it not exist? Because you've got to go back to all the banks' quarterly releases. You have to be able to add up what their new mortgages are versus their old mortgages. You have to be able to calculate how much mortgage debt is being paid down by their customers every month. And then from that number, you can come up with a total. We do it. The numbers that we use are precise. That's why we can forecast housing markets so accurately, because we're tracking all of these individual items and putting that into our forecast. So mortgage debt right now is growing at the exact same pace it was growing at in 2013. Your listeners should let that sink in. It's growing at the same pace as it was in 2013. What is important about that? 2013 was the time that first-time buyers reached their zenith in the amount of money they were able to spend on a house. Between 2013 and 2016 Vancouver, 2017 Toronto, all of your house price change, all of it, was because of a shifting sales mix. The incompetence of today's housing analysts that they cannot calculate a simple sales mix, cross-reference it against simple mortgage data issued by the banks. It defies logic. It just defies logic.
Millennials are now being encouraged to enter the market now that prices have softened, but should they jump in now, or should they wait longer?
I mean, Jim, has there been a group of Canadians who have been given so much information, so many opinions, so many guesses about the housing market than today's millennial? I mean, how many millennials were told with Generation Squeeze, for the sake of the argument, out in British Columbia? That group, they had airplay all across Canada, reports all across Canada that were simply false reports. We would call them fraudulent. Fraudulent because they did not understand how home buyers interact with the market. Then you had millennials being told, berated about avocado toast. And you had millennials being beat down upon about living with their parents. And now you have that the housing prices have started to soften, especially in the condominium class, in Vancouver and Toronto. They should get into the market now while prices are soft. Hogwash. Nonsense. Housing prices are dropping. The housing market has yet to stabilize after the change in the mortgage qualification terms. Your listeners won't understand because nobody talks about it this way. Vancouver, by its nature, in other words, how your home owning infrastructure exists in Vancouver, you naturally have higher prices than everywhere else in Canada. Certainly, it would only make common sense to the listeners that single detached homes in Vancouver should disproportionately increase in value more than anywhere else in Canada. Why? Because they haven't built enough of it. Your condominium to single detached ratio is higher in Vancouver than it is anywhere else in Canada. That naturally means single detached homes are more expensive. Now what millennials need to understand is this. All of this affordable housing talk, all of this talk about building affordable housing, that is not going to help you over your lifetime. It may help you short term, the next 4 or 5 years, get into the market, but it's going to harm you working up the property ladder because all they're doing is putting more pressure by increasing the supply of home buyers in lower priced homes who eventually will want to move up the property ladder. I'll use this analogy for the listeners. If there are 10,000 affordable homes, 12 years from now, approximately 3,000 of those families will want to move up the property ladder. 15 years from now, there'll be about another 20% of those families. So over 50% over 15 years will want to move up the property ladder. But they're not building houses for you to move up the property ladder in. Now, all of a sudden, we're going to triple the number of homes. We're going to have 30,000. Well, the same 30%, now 9,000 people, are now putting pressure, a demand, on the next category of homes. For the sake of the argument, townhomes. They're not building enough new townhomes to meet that demand. So what millennials are going to be experiencing probably for the next 10 to 12 years, and then the tipping point's going to happen, because the boomers then will be liquidating their single detached homes. There are going to be this constant supply and demand pressure at every point that they're in the market. It's the government's fault that this is happening. What the government should be doing, which I understand in Vancouver you can't because you don't have the land, is they should be building single detached homes. Because those single detached homes allow existing townhome owners to move up into a single detached, which creates a vacancy, which a condo owner can then move into the townhome, which creates a vacancy, which a first-time buyer, millennial, can get their entry-level condo. What that does is naturally makes housing more affordable, because when there are no supply-demand pressures in the housing stock, because the housing stock has been built out robustly to accommodating an aging demographic, your house prices don't grow as rapidly, because you never would have ended up with the single detached to a condo ratio that you have in Vancouver. The only reason why a huge market the size of Toronto, houses are not more expensive than Vancouver is because the condominium to single detached ratio is way, way lower in Toronto. And the closer you move to city center, city of Toronto, the higher single detached prices get out of line. That's simply how all housing markets work. So what millennials should take about this discussion is this. Look at your housing market from a provincial level. And then you pick out what one type of house is the most expensive house in your province. So in Vancouver, we're going to say it's in the Kitsilano, Point Grey area, single detached homes. Those are your most expensive homes. You know, folks, nobody should expect to ever own one of those homes. Those homes are now for the super wealthy. But what would that be any different than my hometown of Burlington, Ontario here, where we have a population of 180,000, and we have a subdivision called Roseland, which is like British Columbia's Vancouver. Roseland has the most expensive homes in Burlington. There is no median income earner in Burlington who has ever believed they were going to buy a house in Roseland. It never was going to happen. Vancouver is simply Burlington's version of Roseland. And how sound is Burlington's version of our Roseland? All of the housing dollars in British Columbia and in Ontario. In British Columbia, they go to single detached, ultra luxury class homes in Vancouver. In Ontario, they go to super luxury class homes in the most expensive areas of Toronto, like Rosedale. That's where all of your housing dollars end up. It's called the property pyramid for a reason. Millennials simply need to know that the only thing they should be doing is demanding governments build, right now, more townhomes in Vancouver and in Toronto. And as those townhomes are being built, they should also be demanding that single detached homes get built somewhere else as well. Because unless you remove the bottlenecks that you have by shoving more and more people into condos, you're creating bigger and bigger bottlenecks. And the bigger those bottlenecks grow, the least affordable a community becomes. The only way to remove a bottleneck is to pull it out. Build single detached homes. Build some super luxury detached homes. Let the existing owners that live in those homes now move. Let the flow of the population move through the housing stock. When a population can move through a housing stock because there are no bottlenecks in it, affordability is never a problem because house price gains never get out of line. If you allow bottlenecks to happen, millennials, if you allow the governments to build you affordable housing today, by the time you're wanting to start to have kids, you're going to be in the same problem again. You're not going to have somewhere to move to. Demand the government moves ahead of moves ahead of the population, not behind it. Don't put Band-Aids on a problem today that you're not going to be able to tear off tomorrow. Look forward, remediate your housing stock, make changes to your zoning that are needed to make that happen. Look, I would rezone big blocks, single detached homes in Vancouver into townhomes. I would quadruple the density of those neighborhoods. And if that doesn't happen, you are never going to have a problem. Toronto's never going to be that bad because there's lots of land to build single detached homes on. Vancouver's a little bit different story. You've got to get out to Langley before you've got enough land where...
Well, yeah, we have an ocean, mountains, and the U.S. border.
Right. Yeah. It's the Beverly Hills of Canada. And I don't mean that from an income level. I'm speaking from a housing stock level.
Well, Ross, per capita, no city except L.A. has more luxury sports cars on the road. We see Lamborghinis on the street here with new driver stickers on them.
Yeah, well, that's the point, you see, because not only is it the local BC money that goes there, it's also partially all of Canada's money that goes there. I mean, there are people from Ontario who move out to the Pacific Coast, and they want to live in Vancouver. But there's also global capital that is going to come into Vancouver. And you can't get away with it. Sure, the taps have been turned off in China starting 2 years ago. That had nothing to do with the policy changes in BC. That was the Chinese government starting to stop capital from coming out of China, as was reported on your show. And I think you guys even did an interview with the lawyers group from down in the United States discussing that issue. But yes. The capital then will come from Seattle. The capital will come from Italy. The capital will come from Japan. The capital will come from England. The capital is going to come from somewhere else into Vancouver, into Toronto, and into Montreal. Those three cities are going to get a disproportionate share of the capital. That will mess up your house prices. There is no solution to that. But in all fairness, there's no solution to families in Burlington believing they're going to live in Roseland. It isn't going to happen because wealthy home buyers from Oakville, Hamilton, Toronto, Ancaster, Guelph, all the way around Burlington want those homes in Roseland. It's exactly the same. It's the same for every housing market in the world. It's no different. The only solution is to build your housing stock or remediate your housing stock so there's no bottlenecks that prevent families from moving through the property ladder over their lifetime.
Ross,
unless governments do that, Jim, they're going to constrain the lives of Canadian citizens.
Ross, before we go, what should we expect with April sales figures being reported later this week by the real estate industry?
Well, what you're going to expect is you're going to hear, sales aren't as bad as we thought they were going to be. Compared to March's declines, this month's declines aren't as bad. You may even have a couple of real estate boards that report sales are flat year over year. Highly likely in the Calgary area. Highly likely in the Toronto area. And what I'll tell your listeners is this. They're all phony numbers, meaning you cannot compare month-by-month numbers year over year. The nearest year for this April that you could have reported on was April of 2013. April of 2013 was the previous year that you could compare to this April because the calendar lined up the exact same way. Of course, you can't compare those numbers because in 2013, no one counted for sale by owners in MLS stats. In 2019, for sale by owners are a big percentage of the MLS stats. Two totally different numbers, even though those are the 2 months that are only comparable. The way that the months line up this year, if your listeners really want a tip, go back and look at the housing reports from February, March, April, and May of 2013. And look how the wording changed in terms of the magnitude of change year over year, those months reported. you should see a similar pattern being reported this year, and you are going to see a similar pattern being reported in April. So it is a false number. People are going to use, real estate stakeholders are going to use these numbers to manipulate the public. The public is going to believe them because the banks reproduce them. The government of Canada reproduces them. Everybody reproduces them and believes them. They believe these things to be true that we laugh at because that is not how housing markets work. You need to use trading day adjusted home trades. You cannot be counting sales reported to an MLS association in a month. It is two totally different numbers. One number creates a story. The other number tells the story. You should only be looking at the data that tells the story. The reason why we can time housing markets is because we read the story. We're not trying to tell you a story. We couldn't care less whether or not you buy it or sell a house. All we want you to do is buy or sell your home at the best time possible for your family so that you build as much wealth as possible over your lifetime.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from the wealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.